What's up, investors? It's Mike from MJF Invest. First and foremost, I apologize for the backdrop. Um, it's not going to stop me from making a video. I think I found a good stock. I want to bring it to your attention, but I'm in the process of building my studio. It's a young channel. Speaking of which, an early thumbs up really helps me out because it is a young channel. I'm trying to build a nice audience and get some momentum, and it does help with the algorithm. The stock I wanted to talk to you about this morning, though, was ticker symbol ASRT. ASRT. It is a drug in the biotech field. They have a product line away from opiates for pain, migraines, for neurology, a couple of different things. It's low cap. A couple of things. I came up on my FinViz scanner when I put in some of the criteria that I could be looking for. It popped up, and what attracted me to it, or what got it on my radar right away, was the fact that it had $135 million in sales, but yet just a $66 million market cap, with strong growth margins, right? And not that many shares outstanding, 119 million shares in circulation. That implies that on PR, on news, on momentum, there's not a lot of shares in circulation. This could get going. Which is attractive when I'm looking for penny stocks. Also very attractive that I found from the BAM SEC website. If you don't use this website, I highly suggest that you do. It's all the company's filings. You go to BAM SEC, you type your ticker symbol in, and all the filings and paperworks, investor presentation, it's all in one central location. It makes it very convenient. So shout out to BAM SEC. So in this document, ASRT announces the restructuring plan and leadership changes. They're just talking about moving money around, how they're becoming more efficient to save themselves $45 million annually. Very attractive as an investor, I believe. And they're talking about they promoted a couple of people. What I would have liked to see, though, is how. They didn't get into that of how they're saving this $45 million. It touches a little bit on a merger with the Xyla merger. We'll talk about that in a minute. They just merged with another pharmaceutical company and acquired their drugs, one of which seems pretty interesting. And remember, this ticker's trading at 75 cents a share, 76 cents a share, with a $66 million market cap. So keep that in perspective. Also remember, this is a penny stock. It's very speculative. We talk about penny stocks on this channel because, sometimes they're fun and there could be value, but also they're speculative and risky, and we only take on 1, 2, 3 of them at a time at the most. And ultimately, I use small amounts of money, 500, 1,000 the most. I just invested $1,000 into ticker symbol ZOM, and that was like a lot because I was so nervous because it was a penny stock, and I usually take relatively small amounts of money, and I'm trying to flip them into shares of Tesla, shares of Roku, shares of PayPal, maybe Bitcoin at some point. Kidding, but that's the idea with the trades here, and risk comes with that approach, right? So keep that in mind. I don't want you to hear. I'm going to set my stop losses. I just want to put that out there right away. My stop losses will be set. I would not have high. I have no tolerance for like high. Like if I buy a penny stock and it goes down 15%, I'm out. I'll move on to the next one. I don't hold through all that nonsense. With that, and I also too, on the flip side of that, I take profits when it's there, 100% gains. I start to take my profits in. With that approach, and keep that in mind. I'm sorry, I didn't mean to go off on a rant or a tangent about penny stocks, but the gains most of the time don't stick. They're difficult, so take them while you're there. Take advantage, and let's turn some of these micro cap, low cap stocks into blue chips. That's my goal. That's what I'm doing. So that's what I would use a trade like this for. ASRT presents a unique investment opportunity. They've transformed the company this past year. They've combined Xyla Life Sciences and ASRT Therapeutics. They got a growing portfolio of branded differentiated prescription medications, including Sprint, which is a nasal. Strong financial foundation. In 2019, pro forma net product sales of $126.3 million, $40 million in synergies. Business was profitable on an adjusted EBITDA basis in quarter two, despite the COVID-19 disruption. They have $59.4 million in cash and cash equivalents as of June of 2020, and they even prepaid $10 million of senior secured debt in July. $85 million of senior secured debt due by 2024. Nice to see that they have some cash on hand. I could definitely see, and they've mentioned a few times throughout this investor presentation, that they're looking to add to their portfolio with late stage drugs or drugs that are already maybe under marketed. At the time, they have complementary product portfolios, Sprints, Endoxin. Those are both for hospitals. They have Zorlex, Villadex, Cambia, Zipsor, and then down here, gabapentin. I know that's a pretty profitable drug, but they sold that as part of when they merged. They sold it to sell off some of their debt. But you see here, not small by any means, 80 sales representatives, 70 sales representatives, and they're focused on neurology, hospital pain, and inflammation with this product line. This is the product line going forward. The neurology would be in 10 sales territories, while the drugs for pain and inflammation would be in 70. They're positioned to grow through execution, cash management, and brand development. This is their plan right in front of you. Looks pretty interesting. Keep in mind again that this is a penny stock. I'm not sitting here and telling you that this is a great company. This is a legendary legacy company. But they think the opportunity is to take advantage of the trend toward non-opiate pain medicate products. And the platform capabilities enables us to seamlessly add new product offerings primed to be consolidator in a market for opportunity. So, I'm with that. I think, I could see value in something like that. Non-opiate pain products, 70 cents, I could see a scenario where they add to their portfolio, add a drug or add, some kind of licensing partnership with some of the cash that they have sitting around, and the PR, driving this up, maybe to $1.50. Keep in mind also they have till June 21st. They were granted a 180-day extension for compliance on the NASDAQ. So to continue to be listed, they will need to be over $1 by June. Now, whether they do that with momentum and regular retail investors, or if they do that via reverse split, either way, they have to be over $1. So definitely keep an eye on that. Let me know what you think. I'm pretty interested. I may, take a small position, maybe 500 shares, but my stop losses would be set. This is not like a very high conviction trade. I just think it's interesting. I think it's a possible 2x possibility. I see pretty quick in the short term, especially on news or PR. So that's what I got. Let me know what you think. Thanks for watching. Don't forget to like and subscribe. Remember, I'm not a financial advisor. Do all your own research. It's ultimately your decision whether you want to buy any of the stocks I talk about on this channel. And let's talk stocks in the comment section. Thank you for watching, guys.